Hi, this is Dan Morales. I wanted to shoot a quick video and share with you some information in regards to the Michigan State Housing Development Authority's recent new program announcement, which is the My Next Mortgage Program. The My Next Mortgage Program is meant to provide down payment assistance for clients who are not a first-time home buyer. That's right, if you're somebody who is not a first-time home buyer, this program could provide down payment assistance to you. Now, as a reminder, the state of Michigan does offer a down payment assistance program for first-time home buyers. We'll cover that in another video here coming up relatively soon. But for this video, we're going to concentrate on the new program, which is the My Next Mortgage Program. Now, this program has to be done in conjunction with a mortgage through MSHDA, and that type of mortgage is limited to an FHA, VA, or RD loan. So again, you're limited to FHA, VA, or RD. You cannot, at this time, use this program in conjunction with a conventional mortgage. If that changes, we'll make sure to let you know. Now, this product is limited to a primary residence, meaning that it has to be the house that you are going to live in as your primary residence. You cannot use this mortgage for the purchase of a second home or for a rental property. Now, the maximum sales price that this program allows for is $224,500. If you are going to purchase a property that is more than $224,500, this program is not for you. So again, $224,500 or less in the sales price is the key to being able to use this program. Now, there are some income limits that do apply for this program. The income limits can vary depending on family size and where the property is located. In addition to that, they can vary depending on whether or not a property is a targeted area. Now, there are some targeted areas throughout the state, but if you have questions in regards to what the income limits are that apply to a particular client or for you as a potential borrower, please contact us and we'll make sure we provide you with the income limits that would apply to the areas in which you're looking. Now, in regards to credit score, you are required to have a minimum credit score of 640 if you're buying an existing home that is a kind of a stick-built home, if you will. If you're purchasing a manufactured home, the minimum credit score is 660 for the program. Now, in regards to collections and judgments, the question is, do I have to pay those things off as part of the mortgage? Now, to a certain extent, that is up to the discretion of an underwriter in what the overall risk of your transaction is, as well as the automated scorecard that's used to evaluate your loan. So the answer could be possibly and possibly not, depending on the individual circumstances as they relate to you. Now, I would give you a word of caution. Don't pay off any collections or judgments prior to getting counseled in regards to your mortgage. If you do that, you can oftentimes create actually bigger problems. We'll let you know if that's something you've got to do as part of the mortgage process, because we want to make sure that we take care of you. Now, in regards to down payment assistance, the down payment assistance that's available from the state of Michigan is up to 4% of the purchase price of the property, not to exceed $7,500. But in no case can the down payment assistance exceed $7,500. Now, do I have to take a homebuyer class as part of this mortgage? The answer is yes. You do have to take a homebuyer class. The good news is that's provided to you free of cost, and there are a ton of resources available in order to take that class. We will help you find a class that is close to where you're at. There are classes all throughout the state of Michigan, and we'll help you find one that works for you. Now, can you have a co-signer or a co-borrower as part of this program? You can have a co-borrower, maybe husband and wife want to apply together, but as far as a co-signer or what's known as a non-occupying co-borrower, maybe your parents are going to co-borrow with you so you can have enough income to qualify. In that case, the answer is no. You cannot have a non-occupying co-borrower or co-signer. You can have a co-borrower that's going to occupy the property with you, and that's A-OK and completely allowed. In regards to manufactured home, just a reminder, you have to have a 660 credit score, but manufactured homes are allowed as part of this process. Now, with the standard MSHDA program, you normally have some acreage restrictions that apply. With this program, they don't apply. So there are no acreage restrictions, if you will. However, the amount of acreage that goes with the property should be what's normal and what is consistent for the market area in which the property is located. So in other words, if you've got a 30-acre parcel located in the middle of the city of Grand Rapids, that could be an issue. Now, in regards to required applicants, under the state standard program, anybody that is an adult that's going to occupy the house normally has to qualify for the mortgage and apply for the mortgage. Now, with this program, that's not the case. Only one person can qualify for the mortgage and apply for the mortgage if that's what they so desire. So in other words, you don't have to have everybody apply for the mortgage, which is a departure from what you would have seen under the state's standard program. So that could be good news, because in some cases that could actually make a transaction work for somebody. Now, as far as debt to income ratios, the sweet spot is to have a total debt to income ratio ideally in the neighborhood of about 43% on average. Now, there are some exceptions to that. There are some cases where ideally you'd like to see a debt to income ratio closer to 41%, and there are exceptions that can be made with a debt to income ratio up to 45%. Now, keep in mind that is the exception and not the rule. So at the end of the day, you could possibly qualify for a higher debt to income ratio. Again, what you're really looking at is what is the overall credit risk that's associated with the file when it's all said and done. There is no recapture tax as part of this program. That is different than the state standard program, because typically there you would have to deal with some form of recapture tax. And you can lock in an interest rate for up to 45 days once you find a property. So at the end of the day, this is a great program for somebody who is looking to buy their next property. They meet the income limits, they meet the sales price restrictions, but maybe they just don't have enough money for a down payment. This program could be the key to making that happen. Now, as with anything when it comes to real estate mortgages, the key is to work with somebody who knows what they're doing. And that's the whole reason why I'm shooting this video, is to make sure that you have a resource available to you that can help you with clients that are looking at this type of mortgage, or maybe you're somebody who's looking to buy their next property and wondering how this particular program would work for you. We'd love to have the opportunity to assist you with your next mortgage. Having been a mortgage banker since 1991, I've got a ton of experience doing MSHDA mortgages throughout my entire career, as well as pretty much any other type of mortgage you can name. So I'd love to have the opportunity to help you. Again, my name is Dan Morales. You can reach me online at www.danmorales.com. That's www.danmorales.com, or call me 616-931-4629. Again, 616-931-4629. We'd love to have the opportunity to help you. At the end of the day, not only will you get somebody who knows what they're doing, but will actually provide you with a great level of service as well. I hope you found this video useful, and if we can assist you in any way, please contact our team. Thanks for taking the time to watch the video.